In present video, I am going to explain about 15th problem from consignment account topic. I am making this video for degree students. Previous videos links are available in the description box. In present video, I am going to cover normal loss topic. Let us see the question first. National Oil Company of Pune consigned 100 barrels of oil costing 800 rupees per barrel to Vardhan Oil Company of Agra. National Oil Company paid 5,000 rupees as freight and insurance. 2 barrels were destroyed in transit and the consignor decided to treat this as a normal loss of quantity. 90 barrels are sold by consignee at the rate of 1,000 rupees per barrel. Sales expenses 1,000 rupees. Brokerage 1/4%. Consignee's commission is 2% on sales. Consignee enclosed a demand draft for the due amount. Show the consignment account in the books of National Oil Company. This is a question. Let us see the solution for this. Important points of the problem I have written on the board. National Oil Company is doing business in Pune. They consigned 100 barrels of oil at the rate of 800 rupees each to Vardhan Oil Company, Agra. Here, National Oil Company is sending goods now. So, National Oil Company is known as consignor. Vardhan Oil Company is known as consignee. To send these goods, consignor incurred 5,000 rupees expenditure. 2 barrels are destroyed in transit. In question is giving that this loss is to be treated as normal loss. This is new point. Then, how many barrels are received by consignee? 100 minus 2, 98 barrels. Consignee sold 90 barrels. 1 barrel is sold for 1,000 rupees. And to sell these goods, he spent expenditure. Sales expenditure 1,000 rupees. Brokerage 1/4%. And he is entitled to take a commission of 2% on sale. So remaining money, final due amount, consignee sent through a DD. So for this problem, in consignor's books, he is asking us to prepare consignment account. So consignee is living in Agra now. Agra consignment account we have to prepare. So while sending the goods on consignment basis, sometimes some quantity of goods may be lost during transit or in consignee's go down. So this loss may be of 2 types: normal loss, abnormal loss. In present problem, he is giving normal loss now. So what do you mean by normal loss? If there is any loss of stock due to the inherent nature of goods, that loss is known as normal loss. For example, consignor is sending coal or cement. So while loading and unloading, some coal powder may be lost. Similarly, consignor is sending oil. So while transportation or while storing that oil, some quantity may be lost due to evaporation. So this type of loss is known as normal loss. So normal loss is unavoidable and the quantity is also under limits. For example, when 1,000 quintals of coal is sent, 1 quintal of coal loss is common. It is within the limits. Therefore, we need not to separately calculate normal loss value. So we need not to pass any journal entries for normal loss. Then how to recover that loss amount? That a normal loss amount is charged in unsold stock value. Thus, when there is normal loss, unsold stock value increases. So in case of normal loss, to calculate unsold stock, we have to follow separate method. Let us solve this problem now. Heading is Ledger of National Oil Company, consignor. So in question he is asking only one account now, Agra consignment account. So this is a nominal account. Consignment related expenses and losses we have to show on debit side, incomes and gains on credit side. So first what happened? Consignor sent 100 barrels of oil at the rate of 800 rupees each. So here only 800 is given, means cost price is given. Invoice price is not given in the question. So there are no loading adjustments. When goods are sent on consignment, in consignor's books entry is Agra consignment account data to goods sent on consignment account. So in consignment account debit side we should post now 2 goods sent on consignment account. 100 barrels of oil at the rate of 800 rupees each. 80,000 rupees. Next, consignor expenditure. Debit side we should show. Our assumption is consignor paid this amount through a check. Therefore, write down bank. 5,000 rupees. Next, normal loss. You need not to write any journal entry for that. Directly come to sales. Sale is an income. Credit side we should write. Consignee's name we should write. Vardhan Oil Company. 90 barrels at the rate of 1,000 rupees each. Sales amount is 90,000. Next, consignee's expenditure. Sales expenditure 1,000, brokerage 1/4%. On sales, you have to calculate brokerage. So for consignee's expenditure, you have to write consignee's name. Vardhan Oil Company account on debit side. 1,000 rupees plus brokerage. On sales, 1/4%. So 1/4%. 1 into 4, 4 plus 1, 5. 5 divided by 4%. Nothing but 5 divided by 4 divided by 100. So how to write this? 5/4 into 100 by 1 will be there now. It will become 1/100. Means finally sales amount 90,000 into 5/4 into 1/100 is equal to one numerator, one denominator we should cancel. 4 ones are 225 are 225 into 5, 1125. 1,125. Total in outer column 2,125. Next, commission. Debit side, consignee's name to Vardhan Oil Company account. On sales, 90,000 into 2%, 2/100, 1,800. So everything we are taken. Finally, we have to calculate unsold stock value. In previous problems, how we used to calculate unsold stock value? Unsold stock quantity is 100 barrels are sent by consignor, 2 barrels are lost in transit. So consignee received 98 barrels, consignee sold 90 barrels, means 8 barrels are unsold. So we used to take cost price of these 8 barrels. To that we used to add proportionate direct expenses of consignor and consignee. But in present problem, 2 barrels are lost in transit and this loss is to be considered as normal loss. Then these 2 barrels value also we should include in unsold stock value. Therefore, in a separate manner, by using a formula, we have to calculate unsold stock value here. So remember, when there is normal loss in the question, unsold stock is to be calculated by using one formula. Unsold stock value calculation. See, this is the formula. Cost of goods consigned plus direct expenses into quantity of unsold stock divided by net quantity received by the consignee. Cost of goods consigned 80,000 now. 80,000 plus direct expenses. So sometimes consignor spend direct expenditure, sometimes consignee. In present problem, goods are lost during transit. Means consignee incurred the expenses after receiving the remaining goods now. So on this damaged goods, consignee didn't incur any expenditure. Therefore, only consignor expenses we should consider. So consignor expenditure 5,000 is direct expenditure only. Consignee expenditure may be direct or indirect. Here, sales expenditure is given, brokerage is given. These two are indirect. Even though any direct expenditure is incurred by consignee, while calculating this unsold stock, we need not to consider because goods are damaged in transit. Consignee didn't spend that amount on these damaged goods. Therefore, only consignor direct expenditure I am taking 5,000 rupees into quantity of unsold stock. Consignor sent 100 barrels. 2 barrels are damaged. Consignee received 98. In 98 barrels, consignee sold 90 barrels. So unsold stock quantity is 8 barrels now. Take that number 8 divided by net quantity received by consignee. So consignor sent 100, 2 are damaged. So consignee received 98 barrels now. Write that 100 minus 2, that is 98. So 80,000 plus 5,000, 85,000 into 8 by 98. So one numerator, one denominator if you cancel, unsold stock value is 6,939 rupees. So in this value, there is a 2 barrels cost is also included. Then this amount in consignment account, credit side we should show now. For unsold stock, what to write? By consignment stock account. 6,939. Everything is completed. Finally, profit or loss we should calculate. Credit total minus debit total. Credit total 96,939 minus debit total 88,925. Difference 8,014. So this is profit. Because credit side we wrote incomes, debit side expenses. Income is more than expenditure. So this profit, debit side we should write, because debit side total is less. And consignment account profit we should transfer to profit and loss account. Therefore, for this amount, write down to profit and loss account. Two sides put the highest total, 96,939. Credit side also same. So when there is normal loss, only in consignor's books, that too, while calculating unsold stock value, we should consider. So while preparing consignee's ledger, you need not to consider normal loss. So no special calculations are required in consignee's books when there is normal loss in the question. So this is all about 15th problem. Hope this video is helpful to you. Thank you.